Boom, we are alive, ladies and gentlemen. We've got another fun guest for you today, Mona Elisa, and that is, in fact, her last name. That is not just a moniker. Mona, how are you doing today?
I'm doing great, thanks.
Yeah, it's good to have you on the show. So you're a co-founder of Avant-Garde Finance. You're working on a perpetuals platform, derivatives, focused as a decentralized platform. So you want to give us your background and how we got to
Can I
this
just
point? Oh,
can I
yes.
just stop there for a sec? I
Yes.
think we're not doing perpetuals. I think you're confusing with someone else. So it's
Oh,
the asset management platform. And I know you know this.
yes.
I
Yeah.
know I know
Yeah.
you know this because we've talked before. But
Sorry. Yeah. I was, for some reason, I did cross those wires.
yeah, don't worry, it happens. I mean, you must speak to so many people.
Well, and yeah, yes.
You- Are
Yeah.
you prepared to do asset management? Because we can do it another time if you want. But
Um,
I'm also happy to just go again if you. I mean, I don't know how.
yeah, I made a mistake. I thought it was perpetual future. I guess, for the part of the conversation anyways, like we've been interested in D-Hedge and Soul Rise. So we already
Yeah.
know some of the competitors that are out there. I'm
Okay.
already generally included in the conversation around asset management, decentralized,
Okay.
why it's better, it's how much cheaper it offers the opportunity of opening a fund, what types of pros and cons there are against that in terms of security.
Perfect.
So
Yeah,
I'm
you know
actually
your
primed
story.
for the conversation. I did definitely cross those wires, so I apologize.
Yeah. Don't worry, don't worry. I thought I know you know it because we've spoken before, but I just I know what it's like also to get confused with speaking to a lot of people.
Yes, thank you. I'm glad we fixed that early on. If you would have let me
Yeah,
run with
because I was
that,
like, do I just like kind
would
of
have
pretend it
ruined.
didn't happen?
No, no, it would have ruined the rest
And
of the conversation. I was on a different page. No, okay. Now I know what
okay.
page I'm on. I apologize for that. Try to be a bit better prepared for this, but that's the nature of the.
Don't stress. We're all really busy, so totally understand.
Yeah, and I try to have fun with everything too. So I'm not super strict on any of the things I try to do on a day-to-day basis. Uh, okay. Okay, we'll start over then. Okay. Boom. We are live, ladies and gentlemen. We have a wonderful guest for you today. Mona Elisa is in fact the last name co-founder of Avant-Garde Finance and asset management platform. Now, Mona, we've looked at a few of these already, some built on Solana, some built on Ethereum. And I remember we had talked about some of the things that you guys have been working on that really try to help you stand out from some of the others that are out there. So why don't you give us a little bit about your background and what you're working on?
Sure. It's great to be here. So my background is in traditional finance. Originally, I went straight out of university into Goldman Sachs trading floor, age 19. So I spent nearly a decade at Goldman making markets and prop trading across the asset spectrum. That was a lot of fun. And then one of our clients tried to hire me and asked me to come and run a long short equity portfolio for him. So that seemed like a really great opportunity. Did that for 4 years and then had the itch that I wanted to start my own fund, which I know a lot of people in finance and in crypto do. And so I was approached by a family office one day who wanted to seed me $20 million to launch my own fund. And they were like, hey, we want to seed you to launch a fund. What do you think? And I was like, actually, this sounds pretty interesting. I'd love to give it a shot. So basically went and did that. Was totally excited, probably more excited than I've ever been about anything in my life, career wise. And was totally unprepared for how problematic, difficult, expensive, administrative, it was going to be. And that just took me totally off guard. I sort of, not for lack of trying, not for lack of working hard, but just had no idea that there was so much paperwork involved, so many intermediaries involved. And I guess I'd just been shielded from all of that during my career prior, because we, always worked at large institutions with, budgets and deep pockets to like fund all these operational administrative people to support the investment teams at the firms. And when you're just a small kind of, I say small, like as if $20 million is like not a lot of money. But, when you're sort of a $30 million fund, it's just almost impossible to, to find the time to focus on investing because there's so much other stuff to do. So long story short, I won't bore you with the details. We ended up shutting down the fund after a year. And I was pretty lost after that. So decided to take some time out and go traveling. Went to Brazil. Don't ask me how, but ended up reading an article about Bitcoin one day. Totally fascinated me, and then sort of started digging and discovered Ethereum, discovered crypto, discovered this thing called Crypto Valley in Zug, which was just starting up. This was end of 15, early 16. And I was like, wow, this stuff is insane. And I would have never known this was happening had I still been working in finance. I was kind of like, maybe this is a sign, maybe this is, when you have time, space, perspective, you stumble on new, cool, interesting opportunities. So I just felt that I needed to be a part of whatever was happening in Crypto Valley. So I took a plane to Switzerland, immersed myself in the scene, bought some of my first ETH at like $1.80, started like talking to a lot of early stage founders and seeding them and mentoring them. And eventually I started to think, hey, the future of assets is clearly going to be digital. Look at this was just like first wave of ICOs coming out. And I was like, if the future of assets is digital, like, okay, you could see that like this technology is here, it's here to stay. Everything is going to have a digital form at some point and time. We can basically leverage that idea and recreate the asset management infrastructure into something that's totally automated, efficient, fast, cheap, doesn't need any financial intermediation. And what that really does is it enables the manager to focus on what they do best, invest. And it enables, barriers to entry to fall. So it makes, ultimately, hopefully drives fees lower, and it helps people access interesting investment opportunities in a way that today it's very restrictive to, the big players getting access first. So that was really my journey. And that's kind of what led me to co-founding Enzyme Finance, which was previously known as Melon. And Avant-Garde Finance, my company today, is one of the lead developers towards the Enzyme protocol, which is open source, obviously, and decentralized.
Awesome. I have a kinship with this story as well. My interest in finance and investments came out of the blue for me. My pathway up this mountain to interest in asset management was not the same as yours. Yours started with background here. Mine had nothing to do with that. And I had that same moment where I was like, oh, wow, the paperwork, the amount of legal conversations, the auditing, like all of you have to make all these filings. Like, wait, the fun part is trying to find the interesting people doing interesting things and make investments in these people. Like, I don't want to be doing this other stuff. Like,
yeah,
it's a really, uninspiring part of the conversation. And I think there's a lot of parts of finance that are locked up in this kind of bureaucratic movements. I was doing, just as a side note too, we were doing some research into like things like DAFs, or the donor advised funds. And there's just so much money locked up in these areas because of how difficult it is to do it, to do anything with it in terms of legal and paperwork. And anyways, that in itself is such a fascinating conversation. And this sector really helps solve some of those problems. So I think we can probably lead into that. You've addressed what I thought one of the main problems was that, or at least for someone like me, creative, interested in playing in the sector, is that huge wall of paperwork. Tell us about some of the other less obvious pros to the technology in terms of asset management.
Yeah. So obviously, when I think the thing that gets me excited the most is the automation aspect and the fact that you're reducing costs and reducing barriers for everyone involved. But the other aspects are the self-custody, which I also get very excited about. After 2008, it means investors at all time can hold custody of their own assets if they choose to. So even if you invest in a vault or a fund or an ETF or whatever on chain, you hold the LP token, you hold the token in that, and you can redeem it anytime for the underlying assets. So, I think that's a really cool factor. Wasn't too long ago when, a lot of assets were at risk because because of the repercussions of Lehman Brothers, and a lot of people still trying to access their assets that they're entitled to from those days. And another benefit is the trustlessness. Like, financial intermediaries act as a way to ensure trust between market participants, so that the market can function efficiently. And so if you take a really simple example of that, with a DEX, you can buy and sell peer-to-peer with people you don't know halfway across the world, because the financial protocol is built inside the code base. Like, you know with certainty that if you buy something on a DEX, you're going to have settlement instantaneously, and you don't need a settlement agent in the middle, a transfer agent, a custodian, etc. And so if you take that to the borrowing and lending scene, people can borrow and lend money without financial intermediaries in the middle. And in asset management, it's the same idea, except here investors and portfolio managers can basically interact with one another without necessarily having to trust each other too much, because a lot of what the manager can and can't do with your funds can be pre-embedded into the code base. So we have something that makes Enzyme unique is the ability to code into vaults like certain permissions which managers can and can't do, so that when you're investing up front, with certainty that this manager has set this fee, they can't change it they can't change it without me opting in. They've put a whitelist of assets where they can only invest in this universe of assets. They can only trade with this universe of exchanges. And so if you don't know the manager very well, you can actually invest with the certainty that the smart contracts will enforce at least a certain kind of scope of area where the manager can play with the funds, or what they can and can't do. So I think that like all of these things are really beneficial to the industry. They're really beneficial in unlocking the long tail of managers, talent. They're also really important in enabling access for different investments, because like a lot of the hot investments in today's world are just not accessible, unless you're kind of a tier 1 VC. So yeah, so we're pretty excited about that.
Yeah, the venture capital sector is one of my favorites. And it was one of the things I really liked about 2017. I mean, in that broad spectrum of being able to manage your own assets, it also came to the idea that the average individual not only had potential to manage their own assets, they had access to deal flow that they just never could have got hands on before. Because things have gone so digital lately, it's much easier to strike up those conversations. And it's one of the downsides to knowing that the legal paperwork that gets in the way continues to try to get in the way, like these conversations around what they're doing with BlockFi. Like, is this a security, which doesn't make any sense in terms of part of their conversation. Do you still, I guess, as a weakness, do you think that one of the biggest weaknesses about these ideas, because we've seen that even Uniswap start to take tokens off, is part of the weakness here the regulation getting in the way from the innovation and the people that like to innovate?
Yeah, so two things. So like one aspect of the strength I didn't talk about is the decentralization element, and that's actually a big component too. So the idea that nothing can be shut down by any one person. We decentralized Enzyme over 2 years ago now. So it's it lives on chain, it's open source, it's almost impossible for anyone to shut down. But sure, at the interface level, there are certain regulators and players in the space who are making noise about what it means to operate and run an interface that interacts with DeFi. And it's all very confusing at the moment. It's funny you mention it right now, because I spent this last weekend reading up on a lot of regulatory stuff. It sounds like a really fun weekend, I know, but basically, I sort of found myself going like, a little bit like a yo-yo from side to side in terms of my feelings on this. Like, on the one hand, some of the regulatory proposals that are on the table right now are so absurd and so invasive to basic human rights that, like, common sense just tells me there's absolutely no way these would actually get pushed through, right? Like, in the end, it just feels to me that things like the travel rule, which Fatah is talking about, and all of that kind of stuff just couldn't possibly make it through without being a massive, having human rights organizations on data privacy throwing their toys out of the pram and maybe even taking governments to court over it. And then on the other side, you're thinking, actually, some of these people are presenting and pretty good cases for doing certain things and pretty sensible suggestions. Not all of them, but and so maybe there's a chance that this could go in an okay direction. And I just found myself swinging between the two and not really knowing how to answer that question. And I think that that's because there's just so much uncertainty. I think that the important thing, and the line that Uniswap will go with, the line that all of us will go with, is you can't shut us down at a protocol level, but you can shut down the interface level, or you can put pressure on the people who host the website and the interface. And I think that's the part that requires a bit more thought, because if you shut that down, I was talking to a developer this morning who was like, yeah, that's nonsense. I know how to do it. I can do a trade with Uniswap, because I'm a developer. I don't need the interface. And I was thinking, yeah, that's you, but most people who are driving the majority of the volume in DeFi today probably don't. So, it's going to be interesting to see how it pans out. But I think that, what we'll end up seeing is it's going to take a really long time for anything to happen and for anything to be certain. And I think that in the meantime, the innovation will continue. And then hopefully by the time something comes out, players are somewhat prepared, to deal with it in an interesting and creative way.
Yeah, there's a few conversations I've had where, like you're talking about, that the protocol layer is still functioning, but it's the front end layer that has pressure put on it. We've seen like skinned versions pop up, so it's using the same underlying protocol, but now there's like a different front end that someone's built. I think SushiSwap was copied more than just the front end too. They showed that in the open world of open source, like, you best be ready to fight for your community too, because they're just like an audience, they're very quickly to change their mind about things.
Yeah.
One of the, it's always an interesting part too, because a lot of it lacks the idea of actually educating people instead of just regulating them away from making mistakes, as there's no real depth of line. And then the SEC does things like, hey, well, EOS raises $1 billion. Like, well, as long as you can pay the fine, then we don't really care. So
Yeah.
there's this level of criminality that's okay as long as you can afford to pay their fines.
Yeah. And also, like, there isn't like a whole bunch of evidence that all of this, recently, especially the kind of layers and layers and layers of regulation that have been, brought in over the years, probably since 2008, really. I mean, have you tried opening a bank account or a crypto account anywhere recently? The amount of hassle, the question, it's almost like you get treated like a criminal before they even know anything about you. They need your tax returns, they need this, they need proof of funds, they need proof of this. And there's like no evidence that any of this stuff has helped to reduce anti-money laundering. If anything, I think, the numbers are going up more than ever. So it's like, why are we working so hard towards putting more rules, more regulations, more obstructions, more friction into a system when there isn't even real evidence that the existing layers that have been put on are working as the mechanism to control? Maybe these things are just not that controllable, if that's really what you want to do.
Yeah.
So it's a tricky one. It's a really tricky one. I don't know how we resolve it. With the Uniswap issue in particular, it was largely down to the fact that I think some of the tokens that were in question were considered securities. But you know, who knows what is and isn't a security these days? You know, kind of a lot of it is a gray line, and you know, there isn't still enough clarity, as far as I'm concerned, in terms of where the line really is. Like, you know, the sort of guidelines you get are always worded in such a gray way because they never really want to commit, you know, to something.
Yeah, to have a standard written in the 1930s that is still trying to function with the digital age today is into itself nonsensical. But I mean, that's always one of the abstractions, right? Is here we've got this fun way to do all the fun things we want to do, so we can focus on innovation and get away from the regulations of paperwork. And then the regulators of paperwork guys like, you're back here. Like, no, stay away. Trying to stay innovative, guys. Like, you don't. We invent the jet engine before we know how the jet engine actually works. Like, this is not, you're doing it wrong.
I mean, the bottom line is, I think that regulators are jumping the gun too soon, because like there's just enough data out there about, you know, whether DeFi is a good thing or a bad thing, and why, and what are the pain points, what should we be regulating. You can't regulate it like you regulate a normal financial system, because it's so different. You know, you're talking peer to peer, not institution to peer or institution to institution. You're talking you know, a world where financial intermediaries don't need to exist. It's actually better if they don't exist. Yet, like, a lot of the regulation they talk about is trying to put the financial intermediaries back into the equation. And so what's the point? You're going to remove all the efficiency that we've just been trying to create for the last 5 years. So I think the discussion is just going to continue for a really long time. I think if you read some of the regulatory like headlines that have been in the press like recently, and then you Google, like, you know, regulatory news 2017-18, it's all the same headlines. You know, they haven't changed that much.
Yeah, they seem to be good at repeating their functional party line, I guess. I'm not a big fan. I think education should be a much more important part. That's why we like to do stuff like this. So let's talk about tech. How have you guys built what you have, and what are some of the advantages of building this way?
So yeah, we've been building on Ethereum. We've been building for 5 years. You know, we sort of delivered our first V1 like in February 2019. At the same time, we decentralized the protocol, and it wasn't like it wasn't very popular. Nobody was using it back then. And we took a look around and tried to ask ourselves why. And, you know, kind of two things became crystal clear. The UX UI was just incredibly difficult to use, you know, except to us, because we sort of used it day in, day out. And the other thing was that DeFi had just begun exploding in, you know, the sense that lending, borrowing, all of this kind of things were, you know, synthetics, derivative protocols were becoming a thing. And we'd like sort of built our architecture, or architected our protocol before those things came out. And so it wasn't really built in a way that could like easily adapt to integrating those types of protocols. So we decided to, under Avant-Garde Finance, I decided to make a proposal to the council to try and rebuild and re-architect with our team a vision towards a V2 that was modular, extensible, and scalable. And that's what we've been doing ever since. And we released V2 in January this year. And we've had some really good traction since then. You know, since the end of January, I think our TVL has peaked at around 111 million. Most of the growth has come in the last 3-4 months. I think with the rebrand from Melon to Enzyme, people got a bit confused. And also a lot of, you know, it's been hard kind of rebuilding the brand after people had V1 in their heads, in their memory. And I'm convincing them to come back and give, you know, V2 another try. But, you know, people are talking, people are trying it, people are recommending it to their friends. And we've seen some really, really nice growth. I think the thing that sets Enzyme apart today from any other asset management protocol is it's like a factory to build any strategy that you want, and you don't have to be a developer to do it. You can build the yield farming strategy. We're integrated with Compound, Aave, IDO strategies, Yearn vaults. We're integrated with Curve Pool, so you could run curve pool farming strategies. We were integrated with Uniswap pools. We're integrated with all the major dexes. So, you know, you can do everything from staking, yield farming, you know, AMM pools, you name it, from within one vault, and you get the 24/7 NAV reporting. So we get like, you can track the price of your vault on chain. You know, the protocol can manage investments, redemptions. You can have a whitelist. You can have different rule sets if you want them. Yeah, and it's just really easy to interact with. If we have time at the end, you know, I'd love to show you around, and I can even, if you want to laugh, I can show you where we've come from. I can give you a sneak peek of what V1 looked like and what V2 looks like today.
Oh yeah, I love both these ideas, especially the going over the old product. As an entrepreneur who's tried, failed, succeeded on a few on a few separate occasions. I always like seeing the first iterations, things like Fork Delta and Ether Delta back in the day. Those were hilarious. I was so excited about that when that first came out. I was like, oh my God, we're trading like peer to peer. This is so fantastic. We've come so far.
Yeah.
Love looking back. It's helpful. Yeah, sure. Well, I mean, we can actually do that right now. Why not? Let's just dive in and show us around.
Okay, cool. Do you want to enable screen sharing?
Hey, that was thanks for I forgot you need to there you go. You are now the host.
Awesome. Okay, let's do this. So can you see my screen?
Yes.
All right. So let's start with V1. So this is where we came from. This was pre rebranding. You know, I'm not going to set up a fund or show you how it works, but this is sort of, you know, we never had a UX UI designer the first time round. We did everything in-house, and, you know, it's very simple, clean look, but, you know, quite rough around the edges and very tricky to use.
Yeah.
And then with the rebranding, we've come up with this. And the way we look at it now is we have two different entry points, one for vault managers and one for depositors. And if you're a vault manager and you want to create a vault, it's literally as easy as hit create a vault. You can give it, you know, a name. So let's call it Arcane Capital, for example. You can choose the asset you want it to be denominated in. So this asset will determine what your performance fees are calculated against. You can this easily select a management fee, a performance fee. You can choose like your crystallization period. How often do you want to be able to collect your performance fee? You can optionally have an entrance fee. There's a few reasons you might want to do that. You can have a whitelist for people that you want to allow to invest alongside you, or you can keep it open to everyone. And you can also set minimum or maximum deposit amounts, and you can also reject all deposits if you don't want to take any more. So really a lot of flexibility. You don't need to be technical to launch this vault. You can just, you know, plug in your settings and go to the next step. You're also able to put rules around redemptions. You can use a lockup, although we, you know, we're currently defaulting it to 1 day, but you can override this if you wanted to have like a 1-year lockup or 2-year lockup. And you can then add policies, which is a bit more advanced, where you can say, if you wanted to create a rule set that said, hey, this vault is only allowed to trade with Compound and Aave, you can do that, you know, because maybe you want that embedded in your promise to investors, but you don't have to. And that's it. You just check all of your settings and you deploy it to the blockchain. It's one transaction and you're done. So I'm not going to deploy it right now, but I'll show you one that I've already deployed. So this is an example of one which I've been managing for less than 2 months. You know, you can see my positions. This is a perspective again of the vault manager. So you can see the positions, you can see this vault is running Curve Lido farming strategy. You can see the details of the vault. You can see the contracts if you want to check them on chain. You can check all the financials, so like all the major, metrics you might want to look at, volatility, Sharpe ratio of your performance. You can see fees. You can track like who's deposited and redeemed, and you can track your trade history as well. And the really exciting part is if you want to manage your vault, you have connectivity from within the vault now to all the major dexes. If I want to look up a quote to sell WETH, for example, to buy 1 inch. I don't have 10 WETH in my account at the moment, so it's kind of getting confused. But it will look up what do I have? It will look up the best rates in any of the underlying assets, and it will give you the best rates based on all the dexes. And similarly, if I want to provide liquidity into AMM pools, you'll see here that it's already showing me that all the assets of this vault are in the Curve Lido pool. It's yielding 6.98% in APY, and it's made up of the following rewards. If you hover over the question mark, it will tell you a part of that is from Curve and a part of that is from Lido tokens. So you can, at any point, you can choose to claim and redeposit if you want to compound your interest. And similarly, if I want to add, liquidity to any other pools, I have all the Curve Uniswap pools. We're bringing in balancer pools and others later as well to choose from. You're able to look for yield. So if you wanted to look up, for example, the best yield on USDC, what it's currently doing now is looking up all the protocols that we're integrated with, and it will give me a list of all the best yields for every asset. I'm actually going to refresh it because it's taking a little bit of time. And if let's say we want to look up USDC, so we can explore the yields here. So it will be looking up specifically what are the yields on USDC today. And we can take a decision right here from within the vault and say, okay, the Yearn USDC vault at the moment looks like the best option today. And so assuming I had USDC in my vault, but it's all in the Curve Lido pool at the moment, I could easily deposit into Yearn from here. Another idea would be like if you wanted to diversify, between stable coins, you could just do that all from within one vault. So here you track your rewards and you can farm them anytime. And then the last thing from the manager perspective is you can add like a description for your vault, who you are, leave some contact details. If you get airdropped an asset, you can just add it here and track it so that your vault captures it in the NAV. You can also track your fees and claim them whenever they're due. And another cool feature is you could like delegate trading to someone on your team. So I didn't mention before that it can either be a single wallet or a multi-sig that can create a vault. And you may want to set up, for example, a vault as a company, but you might want to delegate trading to a junior trader, for example, but that doesn't without giving him or her full access rights. So you can just add the authorized user by adding their address and signing that transaction. And that person will have permission to trade within kind of the rule sets that you've created for them, but they can't change any of the settings or any of the policies. They can't change the name of the fund, the fees, or any of that. So that's really like an overview from the manager perspective. And that's probably where we've spent most of our effort in the past. From the depositor side, at the moment, this is something we definitely want to improve on as a next priority, but it's a little bit overwhelming here because you come and you see there's 750 vaults on Enzyme today. You can look up performance based on the different denomination assets. So if we want to look at them in USD, we can do that. And you can sort by the filters if you're looking for something in particular. But we find that most people who come to the site to look for a vault to invest in currently get a little bit overwhelmed with all the options. So what we're working on now is a more user friendly and intuitive journey towards discovering the vault that you're looking for or the strategy that you could be interested in. So that's just a little tour of what we've done so far. If you're looking to use Enzyme for any use case and you're wondering which assets are in the universe, we support more than 250 assets today and most of the major DeFi protocols. And you can always come and look up, any asset. For example, if you're looking for comp, to see if we support it just by coming to the network monitor. And you can also track like the major metrics of the network, by looking up AUM, recent trades, recent deposits, etc. So yeah, that's where we're at today.
Well, this is fantastic. Some of the features in here I really like, even just that ability to go in and look at different yield and spots to earn is such a great user experience. Is really nice. There's also a bunch of other stuff I think that's really important that for even just individuals having tools like this, even if you're not an asset manager for other people, being able to have that ease of function for those other things,
Totally.
to be able to do it with a multi-sig wallet is hyper valuable. I know like for us, we have our interest in multi-sig wallets and lockups and things like Aave and Compound. And here you've built a way to access a bunch of different areas of doing that exact same thing. It's fantastic. I think it's a great product. Now, how are you guys operating the underlying infrastructure? Is it in terms of, I guess, how the assets are managed from the user to the fund manager?
So the user just deposits directly into the vault. So we never hold any of the assets, obviously. It's always deposited directly into the smart contract. And at that point, the manager has control within the rule sets that they've embedded into the vault. So, everything that you see, that you saw just now was like running on Ethereum. And the data that you see,
Yeah, sorry, I guess like with when say the other person wanted to sell, they're leaving the fund. Is it held up in synthetics when they leave? Are they spot selling their holdings in that fund? Like, how does that communication work?
Right. So
kind of a
today,
layman question. I'm sorry.
yeah, no, it's not a layman question at all. Like today, when someone exits the vault, they just receive the underlying assets in kind. But we've had a lot of requests for people who want to be able to redeem a single asset from the vault. And so with the next release, people will be able to redeem in a single asset if that vault allows them to. So it's a lot cleaner for a lot of fund managers or vault managers, and it's a lot cleaner for the investors as well.
And just as a side point, because I like what you've built, could you add something like venture capital into that, where you could sign and sell from, or sign and buy into early projects?
Yeah, I think we'll probably move towards that direction in future. Like it will require a slightly different type of vault, but it's something that we've seen a lot of interest in, and we're definitely interested in trying to facilitate for that.
I don't care what field it's in. I hate
Another
paperwork.
add to our CRM.
Yeah. Well, one of the things I've learned about at least my personal investment thesis is I can only lose so much. And the earlier you are defining an investment, you can make a small investment that ends up yielding such huge returns based off the idea of how much you're willing to lose, effectively, more so than how much you might be capable of making. It's one of the aspects of venture capital that I really like, is that it's all of it is based off a function of asymmetry. You've got a high level of failure quite often, and then when you get one of them right, it's just this impossible amount of upside potential, and it's just a more enjoyable ride for me, because it's like my character. There's volatility. There's a lot of time involved in these things. So as I've grown in my own understanding of what I find interesting about this sector, it's been all focusing in on venture capital because of those kind of mathematical philosophies that I'm also a big fan of. So every time I see the asset manager stuff, I'm like, oh, but what about venture capital? Like, we're trying to avoid all the paperwork too. Although there are some, I'm a big fan of some of the stuff you can actually do. you can sidestep a lot of the paperwork by just not being a venture capital fund. You can also do that.
Yeah.
Don't have to be a fund. Don't have to take other people's money and manage the money for them. There's other ways to conquer the same mountain. But this has been a real pleasure chatting today, Mona. Is there anything else? All the social media channels and anything that's coming up in the future that you'd like the Bear family to be aware of? And then, we can kind of lead out with that.
I think like the best way to follow us is Enzyme Finance on Twitter and Medium. We've got some really exciting stuff coming up in the next month or two, because we're launching Sulu, our release from we've been working on this one since March. So there's a lot of it that's already public, and there's quite a lot that's not public about Sulu that we managed to squeeze in. So we're super excited for that release, and we're hoping to get that out by Q4 this year.
Awesome. So we'll all the social media links will be down in the description below, so you can click on them and you will find them. Mona, it's been a pleasure chatting. I think we had a nice discovery call. We'll keep up to date with where you guys go in the future. Again, I know this we got another decade or two of growth and development in these sectors, so it's going to be a lot of fun to see. Thanks for joining us on today's episode. Give us a thumbs up if you like this content. All your thoughts, your comments, your questions down below, and be sure to follow Mona and Enzyme and do you have Avant-Garde Finance still? Because I'm pretty sure that's how we found you.
Avant-Garde is just the development company in the background. Don't worry too much about Avant-Garde Finance. Like Enzyme Finance is all that.
That was our bad. That's how we found you. But our research is maybe a bit more abstract than the average individuals.
Yeah, that's good.
Awesome. Thank you, Mona. Well, have a great day.
Great. You too. Take care.